Hi there, it's Craig Webb of Webb Analytics with another report on what's happening in the economy as it affects construction supply dealers. This report is sponsored by ECI, and I thank them for that. Now, you wouldn't probably expect to see a B-2 bomber on a PowerPoint slide about what's happening in construction supply, but let's face it, the bombing in Iran is going to have an impact on the economy, and we do need to be thinking about that. I'm going to be talking about that and a number of other things today in this brief presentation, starting with the military strikes, but then rolling straight into what's happening with the economy, particularly as it affects building material dealer prices. I'm going to look at some mergers and acquisitions, and a few other items that I think will help. Now that that bombing has occurred, the big news is what's going to happen next. And we really don't know exactly how Iran is going to strike back. One thing that is quite likely is that we will have increased oil prices. They've been going up for quite a while, as you can see in this monthly chart. And it got to the point where President Trump had to put out a tweet this morning telling people to not raise their prices. So we're going to see whether those factors are going to go in and whether they will contribute to inflation. After all, the Strait of Hormuz controls about 20% of all the oil that goes around the world. And while that's not necessarily a factor on U.S. production, because we produce a lot of our own oil, it will have an effect on oil prices in general. The economy, meanwhile, is still rolling along fairly well. The latest forecast for what the second quarter GDP, that's the GDP that's going to end with the end of this month on June 30th, it's now looking like it'll be about a 3.4% increase from the previous quarter. And so it looks for sure like we're not going to have a recession. But still, whether these numbers are going to hold up are not certain, in part because those tariffs are continuing to keep people nervous. And it's funny, the war in Iran is now sort of taking some of the attention off of tariffs, but those negotiations still are supposed to be going on, and they're still supposed to be having an impact on what's happening. And that's being scared about tariffs is definitely having an impact on the remodeling industry, the building industry. An example of that is Leo Lance, who is a um, remodeler in Virginia, saying the leads just haven't been as strong. Tariffs have terrorized everybody. The consumer dynamic has changed, and people are holding off a little bit. You can see that kind of concern in a monthly report that's being done by the New York Federal Reserve, where they ask people, what do you think your economic conditions are going to be like a year from now? Well, back in June of 2022, people were pretty disappointed with the economy and worried about inflation. And something on the order of 45% thought that their conditions were going to get worse. Then we got all the way through to the election, and in January, with the arrival of the Trump administration, opinions changed, and then 36% thought their life was going to get better. But all the talk about tariffs and other things have caused a souring, a tempering of that mood. And the most recent survey conducted in May found that about the percentage of people between January and May who were optimistic has dropped by 10 percentage points, while the percentage of people who were pessimistic has risen by 13.3% or 13.3 points. So certainly that's a factor that has to be watched. John Burns is concerned about what's going on. And to that, we also have this information from Zonda, where they look at what they call a pushback index, where they're saying, what percentage of people or what share of people are pushing back when they get a bid. And larger contractors, interestingly, are getting it even more than smaller contractors. Meanwhile, we will hear a lot about builders being pessimistic about what's going on. That's the dotted line on this index of their optimism, compared with the blue line, which is the starts numbers. Now you can see that every time the blue line goes up, the red dots go higher, and when the blue line goes down, the red goes lower. So in other words, builder opinion is sort of over the top when it comes to where things are. But the bottom line is builders are pessimistic right now. And in a sense, they're showing their reaction by just buying less. A survey of about 40 decently sized builders, not the absolute biggest, but certainly not the small ones, found that if you compared their sales in January through April this year versus last year, about 59% said sales were down and 41% said their margins were going down. And I think the margins are going down a little bit less than sales, in part because people were changing their margin estimates when they were doing their budget this year. The economies and the economic forecasters of the world basically are saying that they expect the US economy to slow to maybe 1.6% year over year growth after going up 2.8% last year. That was according to the Organization for Economic Cooperation and Development. The World Bank had a similar forecast recently. And when you talk about things a little bit more locally, the Home Improvement Research Institute, which is an organization that looks at the business of home improvement and the products that go into it, they have lowered their estimates of consumer spending to about 3.4% growth. A lot of that is inflation, not volume, from 5% growth just a few months ago. The pro market's they're still looking good. I think with regard to tariffs and what things are happening there, the main thing that I would conclude is that we may be seeing an attitude adjustment taking place in which the tariffs are going to be less than had been threatened on Liberation Day in April, but they're still going to be above where they were. And people are starting to learn to live with a 30% tariff rather than being frightened by it. Interestingly enough, for all that we've been hearing about tariffs, because they've been delayed because of a bunch of other things going on, including a dramatic increase in purchases and shipments from overseas, inflation hasn't really been all that bad in terms of the consumer price index. But that doesn't mean that normal price hikes, and by normal, I mean things that are not tariff related, are trying to go into effect with manufacturers around the country. There are regular increases that they're putting in, plus some special ones, and we're going to see whether those stick. At first, I heard that they were. Now, I'm not quite so sure. But one thing that we do know is some information from the Builder Business Trends and Outlook survey that's done by the Census Bureau basically every month. And in May, they asked, have you seen or paid more for your goods, and have you charged more for your goods in the last 2 weeks? You can see that about 61% of them said, yes, we're paying more, and 41% said we're charging more. So that's about 2/3 of the price hikes so you could say are going through. 6 months from now, what are they expecting? Well, they're expecting even more price hikes in this group. And 53% say that they're going to charge more. So it's about 3/4 and not 2/3 of the people are going to be passing along those price hikes. Now, this group that's being surveyed here are people in the building material and garden supplies industries, everything from Home Depot down to the smallest hardware store and garden center. But that's the best numbers we have as for May. We do believe that remodeling is going to be weak. You've seen these forecasts before, and they continue to be slow. The Farnsworth Group, which is a research organization that talks a lot to remodelers, is finding that business confidence in that group is down. You can see that in the second quarter, the 1 out of 10 score has dropped to 7.5 from 8.6. But in terms of busyness, they're not necessarily all that less busy, and they're actually more booked out than they were in the first quarter. So once again, there's a crisis of confidence, I think, rather than a crisis of actual activity. The jobs market has slowed, but it's not necessarily going into depression or recession stage. And the slowness that we're having is not because you've got a bunch of 25-year-olds sitting in their parents' house playing video games. The labor participation rate for people 25 to 54 years old is as high as it was before COVID. It's the people who are outside of that group, largely the baby boomers who are retiring all the time, that are dropping down, and that's why we're losing workers right now. Just today, we got the existing home sales, and the percentage of sales was 0.7% less than it was in May of 2024. Notably, it's the houses are 3 days longer on the market than they were in May of last year. So that's one sign of a slowdown. We also are seeing slower gains in the median price for that home. And that should help slow inflation a little bit and make things a little bit easier for the Fed to reduce interest rates. Keep in mind that housing costs are nearly 50% of the entire consumer price index. So what's happening with the purchase of a house does matter there. We do have big differences, however, in the conditions across the country. If you were to look at the box in the lower right-hand corner, probably the worst case going on now, according to the John Burns, is Austin, Texas, because they've seen a decline in home prices, but they still got a lot more listings than they did in 2019. Meanwhile, other places are much stronger, like Chicago in the upper left-hand corner, where they have home price growth, but they have fewer listings than they did in 2019. So that's still more of a seller's market, whereas Austin is a buyer's market. Now, we don't have some of these details for the May report that we do in April. So I'll go back to April and look at what Realtor.com was reporting. Listings were up, probably one reason why the home prices were moderating. But even though the median listing price has flattened, affordability still remains a huge, huge problem. And people have been cutting their prices on home listings, although once again, the median price did go up in May. Rents are going down. And while theoretically that's a good thing, notice that it's just a 1% drop, and it's not necessarily going to make a huge difference in the consumer price index. So I know that you've got challenges listening to all this largely depressing information, and the question arises, what are you going to do about it? Well, one suggestion I have is go where the money is. And if 10% of the population spends 50% of the money, then I suspect that it's in your interest to go into the areas where you find wealth. The custom home market remains fairly a good place to try to pursue that business because those people tend to have more money than the people who buy tract homes. And we've had a modest increase, 2%, in the number of starts in the last 4 quarters. So that's still steady as other things are having trouble. Also, pursuing the 55 plus audience really matters because, once again, they are the people. They've got 73% of the net worth in this country. So if you can, try to pitch your stuff toward that crowd. I wanted to talk briefly at the end here about where things stand with regard to openings and closures and deals. We're at a slightly lower pace than we were last year. We've had about 850 acquisitions, and a lot of that has to do with QXO taking over Beacon. But there were some other purchases by the Home Depot and other places. The number of openings is a little bit less compared with last year, but certainly not too bad. The biggest deal that we're pursuing right now and tracking is what's going to happen with QXO in its attempt to buy Gypsum Management and Supply, which is the second biggest, well, it's the biggest privately owned drywall specialty company in the country. And the Home Depot also is interested in buying GMS. So that's going to be something we're going to be watching. Another trend that I've noticed lately, and you may have noticed too, is name changes. In many parts of the United States, what used to run under different names as part of SRS distribution are now all being renamed SRS building products. You can see that in Pennsylvania, New York, Indiana, here, California. Meanwhile, USLBM, excuse me, is taking a bunch of its branches in various states and putting them under state names. So Texas Building Supply is an example, Colorado Building Supply, Arizona Building Supply. In many cases, it's a renaming of Foxworth Galbraith and a combination with other branches. So, where do we stand as of this point in June? I think we still have this question of balance going on. You're seeing prices rise, but volume seems to be dropping. And the question is, if prices rise and volume stays relatively stable, then dealers are actually going to be reporting more revenue this year than they did last year. But what happens if prices go up, but volume drops down? And what you end up with is actually more of a balancing out. You could see dealers' revenues holding steady or even dropping. In general, as I've been saying for the last few months, life today is like being on a paddleboard. The only propulsion you get is from your own effort. You're not going to get any tailwind. You're not going to get any waves pushing you along. If you're going to get ahead, you got to do it yourself. I will point out, however, that this nation still needs what you produce, and we're going to need at least about 1.4 million starts every year through 2035, according to Harvard. We built about 1.4 million houses of all types last year, and so we're going to be doing the same again this year if all works out. That's it for me. Thank you once again for watching. I thank ECI for sponsoring this report, and I look forward to talking with you again in July. Bye-bye.